Welcome back, friends, to Alpha Beta Soup. I'm TXMC. Well, it's a beautiful Monday morning here in Texas. I hope you all had a great weekend. We've got several things to talk about. Bitcoin had an impressive pump over the weekend, finally breaking over 46,000. We'll look into all of that, all the happenings going on there. We'll unpack the futures market. There's some observations to take away. And we'll also see the order books and look at liquidity, particularly on Coinbase. But we will try to keep this video on the lighter side, so stay tuned. If you enjoy this content, make sure to give my video a thumbs up and please subscribe to the channel. I really appreciate all of your support. It allows me to continue doing what I love, so thank you very much. With all that stuff out of the way, we've got some Bitcoin to talk about, so let's get into it. Well, Bitcoin is finally back over the yearly open at 46,200, though it took nearly 3 full months to get there. And as I sit here this morning, price is making its way up towards the yearly high, around 47,990. And that's very exciting. We had been sitting here and watching multiple attempts to break over 40K that failed 1 time, 2 times, 3 times. And in the last couple of videos, we talked about how we saw higher lows developing on the price chart. We felt it was constructive. And once we saw 40K turning into support, it started to feel like maybe we were going to dig out of this range, right? Maybe there's a reason to have some optimism. You know, one thing we have observed on this channel was the almost uncanny ability for price action to manage not to close inside of this zone right here ever since we broke below 40K. You know, price action would sometimes wiggle its way up in here, and then by the time the candle closed, it was back below this zone. But yesterday, we blasted cleanly through it. So what I'll be looking for next is for this area to become a support, right? What we want to see price break out, come back down, test it once or twice, and then move up. That would confirm that we've reestablished this as a support zone, as we had back here before it finally failed. So let's get the reclaim of this area here over the next couple of days. That's something constructive to watch for. Also worth noting, if I pull up a volume profile for price action from 2021 to now, the zone that we had been waiting to break out of, that we'd been stuck underneath and we have finally cleared in a single day pump, was actually an area of relatively low traded volume for the last year. You see this kind of chasm of emptiness right here? So what price actually managed to do was leap through a relatively low volume zone here in between 2 larger nodes. So what this leads me to think is that we may see a bit more friction in this zone here as we work our way towards 50K. Here's 50K right here. I think it's reasonable to expect, if we look especially right here at this churn in this general area, I think it's reasonable to expect that we might have some friction as price works its way up towards 50,000, assuming this trend continues. Based solely on the volume profiles here and just how empty it is in the spot that we leapt through yesterday. Let's pivot to talking about the futures markets. So here in the middle of the screen, we've got our perpetuals basis, which we've been watching quite a bit, and it represents the difference between the perpetual futures and the spot market. And it's showing a consistent, sustained discount that has not softened since the early parts of December and late November. So as price drifts up towards 50K and into the higher 50s, assuming this trend continues, we will be looking for a softening of this trend to more resemble what it did back here when price was moving up. And it would represent a core sentiment shift in the perpetual market, which is highly speculative. And there's a lot of ape retail in this market using leverage. So to see consistent bearishness out of this group tells me that they don't yet believe the pump. They're still hedging themselves to the downside. And seeing a softening of this trend would be notable. But down here at the bottom of the screen, we've got the other futures market, the expiring contracts, the quarterlies. And these more closely resemble the traditional finance futures instruments that people are familiar with. And what we're looking at are quarterly futures premiums for 2022. In the red are all of the contracts expiring in April, in blue is September, and green is December. And the lines represent the premium between those futures instruments and the current perpetual future at those various exchanges. So it's a way of gauging the premium for trading these quarterly futures. And what I notice here, first of all, the yields on quarterly futures really began to soften as we broke into the all-time high in October before we got to November, right? You can really see the highs for quarterly futures were at this point in time, and they started to turn over and soften. So in a sense, this market was picking up on the weakness before other indicators let us know. But I do find that interesting. And the yields on these premiums were drifting down towards zero during this entire downturn. Optimism about 2022 performance just continually draining downwards. But what we've noticed here in the last couple of weeks is a softening of this trend. Let me zoom in on this price action a bit so I can more clearly make my point. When we started to see these yields softening down here, was at the exact moment that price broke over 40K and found it as support, which is comment worthy because we've talked about on this channel the repeated attempts to break over 40K and the subsequent failures that we experienced throughout the month of February. And what do you know, here in mid-March, right after the FOMC meeting comes out where Jerome Powell confirms a 25 basis point hike to the federal funds rate, the point in the market that we had talked about everyone waiting for. That happened right here, and afterwards, price broke over 40K, found it as support, and began its constructive climb upwards. That moment signaled to calendar futures that maybe it's a chance for optimism. Maybe there's something to look forward to, and maybe we can expect slightly better performance out of Bitcoin this year. Now, I don't know if that will come to fruition, if these traders will end up being correct, but what we can clearly see is a softening of these yields here, almost perfectly in tune with the reclaim of 40,000. So this is an interesting dynamic, and if I were to characterize this change here, I would consider this a glimmer of optimism, a ray of light bursting through the clouds that the calendar futures market, where we have sophisticated traders, they are showing mild signs of optimism, though it is worth pointing out that all of these yields are still depressingly single digits. I mean, a 3% yield from now to the end of September is not much to write home about, but it's the trend reversal that we're commenting on here, friends. Here is our Trading Light platform. This is a tool we use to look at the order books. I do have a gold subscription with Trading Light if anyone is curious. That lets me see all of their little bells and whistles. You don't have to have the same thing that I have, but it's a powerful platform if you're looking for some extra edge on intraday and shorter time frames. And the reason I want to look at this is for order book density. Now, this seems like a big, massive spaghetti if you're not used to looking at this. And so I'll try to walk you through the observation here. What this really shows is the density of passive orders. And where these lines appear and disappear are the places where those orders were opened and then subsequently closed. And what we look for is density and distribution of these lines, of these orders. We make a box here around the recent price action. Here's the breakout that took us over 46,000. And just below this area, it's almost imperceptible. There is a softening of the order books. You can see a bunch of lines come to an end inside of this box, just underneath the breakout. These are orders down well below the price action that were closed out upon the move of price. Once we broke out over 46K into the zone we currently find ourselves in, a lot of traders pulled their buy orders. And what that results in is lighter liquidity underneath price. There's a noticeable lightening of the density inside of my pink box here compared to where it is just to the left. It's very subtle. It may be difficult to notice on stream. I'm not sure the quality of what this will look like on the video, but if you were looking at this in a browser, you would be able to see that right around in this area right here, there are a bunch of orders that just kind of vanish and they haven't really been replaced. And yes, there are still many passive orders sitting underneath price, but the density has changed. It's thinner, particularly up here. You see the density of this zone right here compared to this. They look very different, right? There's a lot of white clustered in here and a lot of black clustered in here. This is a lack of density of orders. So the reason I'm pointing this out, because if we zoom out and we just look at where we are right now, it does appear there's less liquidity below us than there was just a day or two ago. Something to keep an eye on. This can change quickly. But even if you look down here at the bid and ask sum indicator just below, this is showing bids in green, asks in red asks being sell orders. And look at the reversal, how the bids are now much lower than asks. They've dropped down around the same point that I'm describing a thinning out of liquidity here on the heat map. So I'm not trying to say that we're going to dump, but I am showing you that at least as far as Coinbase is concerned, there doesn't presently exist a deep well of liquidity below the current price, which opens us up to some vulnerability of back testing. Just something to keep in mind over the next day or two as we watch price try to get back over the yearly high and fight its way towards 50K, is that in the short term, liquidity on Coinbase is thinner. The last thing I'll touch on is futures open interest. We're looking at it here on coinglass.com, GLASS. And would you look at the levels of open interest here in BTC denomination? So we're cutting out some of the noise of dollar fluctuation in price. You look at it here in BTC denomination, open interest is virtually at all-time highs and has increased some in the last few days. We zoom in a little more closely here, we can see the trend has not softened at all. And when I see the amount of Bitcoin currently sitting in open interest, and when I look at the funding rates and I see that they're still largely at neutral, remember this 0.01 value is not really a positive funding rate. It's more of a neutral funding rate. When I see that in conjunction with all of this open interest and the sustained negative discount in the perpetual basis, feels to me like we're setting up for a squeeze scenario if price continues pushing higher. Some of these shorts are going to get vaporized. I don't know where that trigger is because price action has been so choppy recently, it's hard to get a good idea of where I think a lot of these shorts might have entered. But just broadly looking at things, we're seeing this sustained negative discount behind spot, which shows they're not being overly aggressive to the long side. And we've got this insanely high open interest here. It makes me feel like we're setting up for some kind of a flush out, for bears being on the wrong side of a relief rally. We'll have to see how it plays out, but as we discussed, liquidity has thinned out a bit on Coinbase. It doesn't mean that we'll dump, but price moved quickly yesterday, and it may mean a couple of days of finding support atop the yearly open before we're able to move on. But all right, we're going to keep this video tight. There are glimmers of hope, little ray of light of optimism showing itself in the quarterly futures market, where we're seeing the premiums begin climbing towards the positive again after multiple months of trending towards zero. But we do see high open interest and a sustained negative bent to the perpetuals market, which means that some shorts may find themselves on the wrong side of a relief rally if we keep seeing price climbing. But what we're looking for next is a reclaim of the yearly high before we can say that we've finally surmounted what had previously been a high level of resistance. So stay patient, friends. Under the hood still looks good, but my base case is that we are in a relief rally, and I'm waiting for the market to show invalidation of that. Make sure you're following me here on Twitter at TXMC Trades. I post a lot of my thoughts, a lot of my analysis, a bunch of charts that don't make it to the videos go on here. It's also a great place to ask me questions and interact with me. I'm very active on Twitter. If you have any feedback for me or any questions, leave them in the comments below as usual, and I will go through them. We will speak again in another day or two. Try to enjoy the end of March, friends. Take care of yourselves, be kind to one another, and we will meet again in just a couple of days. Cheers, everyone.